The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
This is Denise Nostrom, CEO and founder of Diversified Financial Solutions. Now more than ever, investment advice is needed. Not just where best to invest your money, but why. Are you investing for your future retirement? Are you retired and looking to maximize your income? Are you maximizing your income and concerned with leaving money for your loved ones? Are you investing for your retirement at the same time saving for your children's education and at the same time saving to buy another home? Are the markets in line with your goals? Are your goals ever changing? Please contact me at 631-758-8691. That's 631-758-8691, or visit us at diversifiedfinancial.biz. For over 25 years, I have been helping individuals, families, and business owners navigate through all market conditions with only one goal in mind, my clients. Visit me at diversifiedfinancial.biz or call Denise Nostrom, founder of Diversified Financial Solutions, at 631-758-8691. That's 631-758-8691 for a conversation about my most important client, you. Good afternoon. Hope you are all doing well. We made it to yet another Friday. That's a good first step, I believe, right? Can you even believe that it is the middle of November already? Is it just me, or does it just feel like everything is just moving by so quickly? And I don't really even know what's happening, honestly. It's unbelievable. So, but I'm not actually too sad. I think I might have mentioned this last week. I'm about ready for the new year. This one wasn't terrible, but it was riddled with like highs and then really, really super lows. A lot of stuff has just been a little bit off the chart. So not one of the better ones. You know, I'm typically an even numbered girl. I like the even number years. So 2026 is good. Got several things to look forward to next year. I'm going to be doing some sail fishing in Jupiter, Florida in February. I've never sail fished, so I don't even know what the heck it is, but I'm going to be out of here in February in Florida. So that's not so bad. I have a high school reunion, my high school reunion next year in July, which I can't believe. And my firm, Diversified Financial Solutions, is going to turn 30. That's right, 30 years old, which I can't even believe. I started when I was 10. So yeah, I'm only kidding. But anyway, so there's a lot of things that are going on, and so it's going to be exciting. And there's approximately 12 weeks until spring. Now, you're going to totally get sick of me saying this, but I'm going to keep the countdown because these chilly, dreary days with no sun are just not my jam. So that keeps me going. We got to do what we got to do in this life. So I want to thank you all for tuning in to the Financial Chick Show. I am your host, Denise Nostrom, the CEO and owner of Diversified Financial Solutions. Your financial chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. So if you want to learn more about me or my firm, you can always check out the website at financialchickshow.com. We're also on Facebook at Diversified Financial Solutions, so you can like the pages and get updates and see what's happening. We're always putting some good material on the page, so see what's going on there. And, you know, like I said, go into the website. You can really find out more about our firm, what we do, and learn a little bit about all of us, me and my employees, Mike Scudero and Brian Hardigan, and even the mascot, Winnie, our little puppy dog, who is crazy lately. She barks like at everybody. So we need to get her some training, I think. She's very verbal. Let's just put it to you that way. But anyway, so how did your week go? How's everything going? Everybody seems to be spinning out of control. Talked to a lot of people during the week. We're getting a lot of calls. People are, just moving and shaking. There's a lot going on, money coming in, money going out. And everybody just seems busy. Everybody has, not enough hours in the day, not enough days in the week. It just seems crazy. But so this week too, it's been a little bit wild for me. So I lease my car, for business and stuff like that. So I got my new lease. The lease was up. The car companies, they always want to get the cars back early, so it wasn't up until next month, actually, the end of next month. I had to get the new car, which is great. I love having my new car, but it's always all the trial and tribulations, but my company does pretty good. So I'm excited about it. Just leasing's not for everybody, from a financial standpoint. I do lease it because of business, and I can kind of work with some, deductions and stuff like that. And I don't do a lot of driving. That's one of the keys. If you do more than like 15, 20,000 a year, probably 15 would be like the max. Leasing's probably not a good thing from a financial perspective. I like the fact also every 3 years, I mean, I probably wouldn't own a BMW. The leasing I like because then I can kind of get it back when things are maybe start going wrong with it because it is expensive to fix those types of cars. And then realizing that I'm not doing a lot of driving, that I moved my car down to $7,500 a year. So, we've saved a little bit. Actually, my lease is less expensive than it was 3 years ago. So that's always a good thing. And again, a lot of it has to do with the mileage, but I turned in my car like $12,000 less than I should have had. I was doing $10,000 a year. So that was sometimes we have good financial results and sometimes not so good. So they used to give you a credit, but the car company took that away January of this year. So that really sucked. But anyway, it is what it is. You do what you do. We also had a lot of things moving and shaking with regard to the house. We've got our floors done. We've been waiting years. It's procrastination is key in some cases. You get busy. My husband's a business owner. I'm a business owner. You get nuts. But we finished our flooring. And with the flooring, then we decided to get a new bedroom set, which we hadn't gotten in a long time. So let's just say that the company delivered everything the first time. It wasn't right. So then, of course, we got another delivery this week. So that was last week. So this week we got another delivery and it still wasn't right. So we're hoping that next week, 3 times the charm. So, all I'm saying is we got the floor done with a local guy. He did some painting and everything like that. Fabulous. Everybody did a great job, clean up, everything like that. Now you get your furniture delivery from a large company and it just seems like, go small, mom and pop, small business. You seem to get a little more personal attention and things tend to go a little bit better. That's just my from this particular scenario. Small business is the way to go. But anyway, so speaking about, but they're on the smaller side. So everybody's very excited. Uncle Giuseppe's right here, not too far from the airport, is opening first time today. So very exciting for the South Shore Long Islanders. We don't have to schlep up to Port Jeff anymore. So that's pretty exciting. I'm probably going to try to make my way over there at some point this weekend. So, what's been happening? So some interesting news this week on November 12th. Got to say a little bit of a prayer, or not a prayer, but I guess just, feel a little sad that the penny, the 1 cent, the penny was made. It was the last penny was made on this past Wednesday. It's been discussed for years that they've been talking about getting rid of the penny. So the stats on that it actually costs 3.7 cents to make a 1 cent coin. So the Mint had indicated, or they reported that they were losing $85.3 million on making nearly 3.2 billion pennies back in 2024. So that's $85.3 million to make 3.2 billion pennies. So that's a big saving. So a great move by this administration. Thank you for finally taking it over the line. It's been talked about for freaking ever. And now it's going to be interesting to see, like, when you go, though, when, the change, I guess we're just going to do some roundup, but we haven't really talked about that, right? I guess, if it's $2.44, I guess you just give $2.45 and call it a day, right? We'll see how that works out. But, RIP, rest in peace to the penny. And it's been a good 230-year run now. So 230 years that we've had the penny, but and now it's gone. So there you go. So one other thing, they're saying that, we have the Turkey Day coming soon, Thanksgiving, that Walmart did a study and they said that actually the cost of all of the turkey and the vegetables and everything are down 25% from a year ago. So that's some positive news too. And, very interesting week this week. We hit all-time highs on Wednesday on the Dow, and all the markets have been going up. And then, of course, everything changed on Thursday. And today, the markets were kind of, they were up. They started off the day pretty poorly, but they did make it back up to some good numbers. So it's been a very, very volatile time. But if you've been listening to the show for the past couple weeks, I've been talking about this, that, when we're constantly hitting these all-time highs, you really have to look at your portfolio. And we've been doing a lot of rebalancing in our office with our clients because, we're seeing some good returns. And not to say that, oh my gosh, everything's hitting all-time highs. Not everything is hitting all-time highs. So you really, it's kind of a stock picker's market. There's a lot of bargains that are still out there, but there's things that have done extremely well, and you need to take some of that profit off the table. And it's a great time to do that too, to pare your losses. So if you have a stock portfolio or even mutual funds that may be on a loss, maybe you can sell some of your winners and reduce the taxation that you have. Anything that we talk about, if you want to come into the office and discuss and see how to do that in the most efficient way, that's what we're here to do. Take the onus off of your plate and put it on our plate. So you can always call the office at 631-758-8691 to make an appointment. I will tell you, we are booking up quickly. The end of the year has been quite, it's been pretty busy, but if you have questions, you can always give a call and come into the office, and we can assist you in anything that you need. So at the second half of the show, we're going to talk more about some things that have also happened this week, the government shutdown, and some strategies. And we're going to do some planning for the new year, for 2026. It's almost here. So we're going to talk about some numbers. The numbers have come out. The government's open. We're getting information. So I want to share that all with you. But you are listening to the Financial Chick Show. Stay tuned after the break. Welcome back. This is Denise Nostrom, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I'm here to help you in your financial journey. Over the years, things change, and I'm here to help you navigate all those changes. So yes, I was speaking with my engineer, Zach, during the break, and he is right. I had indicated about all the change and doing change, but we're going to have pennies around for a heck of a long time. Like I said, just in 2024, they minted 3.2 billion pennies. So I think we're going to have them around for a while. I'm very absolute. I'm like, it's done. Move it out. But they're still going to be in circulation. So things won't change in that venue for a while. So that'll be interesting. So we'll have to kind of keep that on track and see what that's going to look like over the years. But all right. So what else has been happening? So big news of the week. The government is back open. President Trump signed the funding bill on Wednesday night. The cost to the United States for the shutdown was around $90 billion. Which was kind of sad because nothing was improved, and it was really a waste of 43 years. Oh my God, it felt like years, right? 43 days. One of the biggest issues was the Obamacare subsidies. That was really what the Democrats were fighting for. They wanted to not pass this bill without that being in the final funding bill. But when we look back, the Biden administration extended those subsidies, but they were set to expire in December of 2025. So these are the unintended consequences of kicking the problem down the line or down the road. Because when your party doesn't win, you can't actually continue on with the processes that you have. So everybody has a different opinion. Opinions are like, you know what? Everybody has one. So it's like when you procrastinate on doing things, you will typically have a chance to follow up or do that thing unless, of course, you miss a deadline. And if you miss the deadline or have a time limit on something, well, you're what they call SOL. And I can't say that on the line, but if you know, you know. And again, so they tried to save face. So they were just continuously working to not open up the government for that long period of time. And of course, they didn't get anything. So it was a waste. Interesting statistic, however, is that only 7% of the U.S. population is on the Obama exchange. And I cannot rightfully call it the Affordable Care Act because it never was. And the lies to pass the legislation were insane. Back in that day, I used to sell health insurance through my firm. And, myself being, self-employed and my husband being self-employed, we both had to pay, our own health insurance and obviously have a family plan. And it was ridiculous. I mean, when the Obamacare came into effect, we had a lot of companies that were in New York, and then they would jump out of New York. So we would get a policy that would presumably fit our needs. Our daughter was young at the time, and we would have well, not we, I would have to call these companies and I'd say, okay, listen, so this is my primary care doctor, this is my husband's, and then this is our pediatrician for our daughter. And they're like, okay, well, we can, we have the doctors for you and your husband, but the pediatrician's not on the policy, that you can't get it in this particular plan. Okay, next plan. So we'd have to go through this constantly to try to fit a round peg into a square hole. But the beauty of it was that, didn't Obama say that we wouldn't have to give up our doctors? Unfortunately, that was not true, because to get a coverage that was going to be affordable and have all of our doctors, we had to get a policy that was going to help us, but didn't have all our doctors. So it was really, really annoying. And we'd have a thing. I think one of the companies, they're not in New York anymore. I don't even know if they exist anymore. But we had a company called Oscar for a bit of time. And we were running it through. And, we're in open enrollment right now. So, you get your policy and then it starts the following year in January. And we would run through the year and then we'd get to like July or August and like, okay, well, that insurance policy is leaving. It's gone. No. So I'd have to shop mid-year to get another policy. And one thing that they did was, if you have a small business, he was not small business friendly, the Obama administration, that if you had 3 people, so like you could have a small group, which if you're an individual, you pay more money. If you have a small group, you pay a little bit less money. If you have a large company, obviously it's less money. It's all economies of scale. But you used to be able to have a husband and wife be counted as 2, and then an employee, even if they opted out, let's say their spouse had insurance, you could still qualify for a small plan. After the Obamacare came in, they had the husband and wife was 1, and then, you had to have at least 3 people. So if you had a small business, which I did at the time, I didn't have as many employees, we had to pay an individual rate. So we were fortunate enough that I met a gentleman that, told me about this cost-sharing plan called Christian Health Ministries. And since 2017, we jumped out of traditional health insurance, and I couldn't have been any happier. We have the coverage through Christian Health Ministries, and we've been very happy with it. And it covers and meets all of our needs, and we're not bankrupt. Because when we jumped out of health insurance, we were paying about $1,700 a month. I'm sorry, $1,900 a month, and our deductible was $12,000. So that's per person. So, it was absolutely out of control. So I'm glad that the government is back on track. I feel terrible that people have to have the extra costs in healthcare, but know that there are alternatives. And one thing that I will talk more about, we're very excited. Well, I don't know how excited I am, but I am going to be offering health insurance through our firm. Very interesting situation. A lot of people have side hustles or gig. There's a lot of gig work right now, freelancers, this and that. So Amazon was actually the company that has started this, that they're offering health insurance that is not really just an individual, like I just referred to a short while ago, that now it's under a group type of program. So if you are having issues on the exchange and it's too much money, you can give our office a call and we can run you some quotes to see if you can go through this Amazon program that, and again, it's not an Amazon program, but Amazon uses this health insurance as a group type of thing. So very exciting to have this to offer to my clients and to you guys, my listeners as well. So one thing that came out this week as well was floating the idea of a 50-year mortgage. I know President Trump and the administration had spoken about that. I've heard a lot on both sides. I'm going to give you my opinion because that's what you're here for, right? Yes, a 50-year mortgage sounds like an absolutely crazy thing. 50 years, oh my God. But when we think about it, this is really the only solution that anybody has put on the table to address the fact that many young people, middle-aged people can't afford a home. They have to rent and throw money away. Whereas we know it's much better to have a home that you can accumulate resources, and you can, and have, oh gosh, I can't think of the word right now, but you can have, you're building equity in your home. So here's my take on it. Now, if you have if you're going for a first time mortgage and, you're going to use a 15-year or a 30-year, the 15 years going to, you're paying in a shorter period of time. You're going to have to pay so much more money than if you extend it out to 30 years. So then we go to 50. All right. So obviously it's going to bring that payment down a lot more too. Now, of course, you say, gosh, the bank is going to win. They're going to get so much interest. Here's the thing, a couple things. One, most people don't stay in a house for 50 years. Some do, most don't. When you get into a home, now I know we just did this a couple of years ago when rates went down, we had a 30-year, but we did something, we refinanced our mortgage and we refinanced it to a 15-year. So even if you don't want to refinance and pay the cost, you can always pay more to the mortgage and bring down the number of years that you're paying. So we have tools in our office that we can, give you some examples of how that would work and what you could do. So as far as affordability, I don't hate the 50-year mortgage. Like I said, I think it's a solution that nobody else has come up with, that is going to enable young people that are maybe renting right now to get into a mortgage that they can afford in the attempts or hopes that, and usually this does happen, as time goes on, you make more money as you advance into your career. So don't throw it out the door. Don't kick it to the curb. Give it some thoughts and know that there's different alternatives and it's not really a bad idea, So anyway, the show is just rolling past. We don't have that much time left, but it was Veterans Day this week. So I do want to thank all of those that are currently serving and that have served and to thank them for their service to this country. And I believe I agree with Kevin Downey Jr., another radio show host. It should be Veterans Month. One day is just not enough. So actually this Sunday, I am going to be going to Gratitude in Motion yoga event. They have it every year. It's actually going to be in Babylon. I will just, if you Google Move with Gratitude, Take Action, Show Thanks, Heal Lives. It's a yoga event in Babylon. So I'm running out of time, but I'm going to be there to honor our veterans and to give them support. What they do is they give free yoga classes to veterans. So I think it's a great thing to do. And if you're free on Sunday, come on down. Have a wonderful weekend, and I will see you next week. Take care.
Advisory services offered through Blackridge Asset Management, LLC, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC, member FINRA, SIPC. Blackridge Asset Management and Diversified Financial Solutions are separate and independent entities from Peak Brokerage Services.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.